Good morning from Los Angeles. Alyssa Quorum and Ken Shreve here with your market update. It is Friday, October 5th. On today's show, we are taking a look at Citigroup, Costco, and CSX, the three C's there. And we're also taking a look at the 10-year yield. But starting the day off with a look at the major indexes, we have the Nasdaq down about 0.2% right now. The Dow has turned lower, down about 0.1%, and the S&P 500 so far staying in the green today. But it's not looking too good here, especially for tech stocks. Looking at the Nasdaq below that 50-day line here.
Yeah, I mean, software stocks really got creamed again on Thursday. The Nasdaq, closed below its 50-day moving average and higher volume another distribution day. So, the weakness in leading growth stocks have been pretty well documented all week. We saw more of it yesterday. Quiet open for stocks today on weaker than expected job growth for September. We'll see what the close looks like to end the week.
All right, and taking a look at the 10-year yield, I mean, we are continuing to see it climb and climb as money flows out of bonds. So where do we go from here? How is it going to impact stocks, or could it?
Yeah, it was a big breakout for the 10-year Treasury yield on Wednesday. It was up sharply, and it is up again today. At last check, up another 3 basis points to 3.22%. At last check, the odds of a rate hike at the December meeting for the Federal Reserve, that has increased quite a bit, now up around 85%. So, the bond market's still grappling with what the trajectory of rate hikes is going to look like next year for the Fed. But yeah, I mean, the bear market in bonds has been well documented for many months, and we'll see if bond outflows, if that can provide a cushion for the market here. But as we said, the Nasdaq looking quite vulnerable at this point.
Exactly, and that visualization there of the 10-year yield, very powerful to see. Just quite the climb that it has made in recent months.
Yeah, especially that bullish move Wednesday. That move it hit the highest level since July 2011. So definitely a noteworthy move in the 10-year Treasury yield. And again, the broad market looking vulnerable here.
That's right. Well, we will be getting earnings from financial names next week, Citigroup among them. And the stock is setting up ahead of its quarterly report. And we have a cup with handle building here. Citigroup, it has seen quite a few quarters here of nice double-digit growth on both the top and bottom lines. So is Citigroup expected to keep this up?
Well, it should be another strong quarter. When JP Morgan and Citigroup reported earnings during the second quarter, the results were pretty good. And so Citigroup and JP Morgan scheduled to report a week from today, next Friday. So you mentioned Citigroup in a pretty decent setup here, just below a 75.34 cup with handle buy point. So we'll see if strong earnings from the financials next week. That's basically going to kick off third quarter earnings season. We'll see if that can provide a little floor for the market and maybe bring some buyers back in.
That's right. You see that it's saucer with handle really here, 20% depth. So it is now trading about 3% below that level. As far as looking at the chart and bullish patterns that you like to see, how would you kind of look at this base and how it stacks up against other maybe prettier looking bases?
Yeah. I mean, it's not perfect. Let's call a spade here. It's not a great looking base, but it is 3% off its high. It's holding above its 50-day moving average, and when you look at the weekly chart, it is a pretty well-defined cup with handle base. Whether or not it's going to be able to break out, again, we've got some undercurrents of selling in the broad market here, which typically makes for a tough environment for breakouts. But we'll see if the numbers are good for not only Citigroup and JP Morgan. We could see buyers come into both stocks.
That's right. Well, we do have shares of Costco gapping down almost 3% in heavy volume today after issuing its quarterly report after the close yesterday. We had earnings in line up 13%, sales up some 5% to beat expectations. But I think the interesting thing that came out of the report is that the company reported IT deficiencies related to its internal financial reporting system. So what kind of impact could that have on the company moving forward?
Well, it just kind of raised some questions about what exactly do internal deficiencies mean. And but Costco did say that it's not going to result in a restatement of prior earnings. Still, the stock is not reacting positively to the news. A gap below the 50-day moving average. There were some that were thinking the stock would be able to find support, but clearly support has given way today. A relative strength line that's lagging pretty badly. So this is for those that have a profit in Costco, buying at the last breakout, sitting on a nice gain ahead of earnings. earnings, this is definitely a sell signal with the gap below the 50-day moving average.
That's right, and I think they even said material deficiencies, so that's not ever too good when a company says that.
Yeah, it's kind of an internal thing, so I'm not sure that it's
Right.
deficiencies that went to the outside or a result of hacking or anything like that.
Sure.
Just some internal control problems that they acknowledged, and so we'll see. Stock not acting that great for sure.
That's right. We'll have to see where it goes from here. But we also want to take a look at CSX. Now, why are transport stocks on your mind right now?
Well, I mean, we are sitting in a pretty good economy. You know, economic growth is pretty good. The jobs report, again, was a bit disappointing, but that comes on the heels of several months in a row of very, very strong job growth. So the transport, Dow Jones Transportation Average, only about 2% off its high headed into today. And inside the big cap 20, our list of leading large cap growth stocks, we've got CSX Corporation, and here's a look at its base right here, trading close to the 75 level as it works on a flat base. Railroad operators doing well, and this is just a good setup in an uncertain market. So we'll see if CSX can muster a breakout. We'll see.
That's right. Some pretty nice tight trading here. The base forming above that 50-day line. It's about 2% below that buy point. So if and when the stock does break out, what are some of those signals, those indicators that investors should be looking for?
Well, heavy volume. You definitely
Yes.
want to see it take out that 76.34 buy point in a rush of trading volume. You mentioned the flat base itself, pretty contained pullback, only 5%, came down to the 50-day moving average. So as far as flat bases go, it's a pretty good looking base, and you can see that relative strength line on the chart pushing towards new high ground. So this is a pretty good technical setup in a kind of an uncertain market.
That's right. Okay, everyone, thanks for joining us today. And be sure to head to investors.com throughout the session as well as after the close for all the latest market news and analysis. And be sure to check us out across our social media pages, not only on Facebook and Twitter, but also on YouTube and Instagram. So make sure to subscribe and like us to stay up to date. Thanks for joining us. Have a great weekend, and we'll see you back here Monday.